oil is one we've been touting for the longest period of time. I mean, we're also in the same video, was it last video? We mentioned natural gas, and that rose on the instrument I was trading, it rose 150%, which from the charting perspective was looking at the 200 again. So I bought on the 200 because we got above it and then came down to it. So I bought around here and then price skyrocketed after that, which is great. But you can see also how silver's been, I mean, natural gas has been trading for the last few years. It's had that big fall off after the Russian-Ukraine invasion and then finally started to regain that. And that was a good indicator for me that that was a good opportunity. Likewise with oil at the moment, which is where I've been slowly building a position if it lets me tap it. But yeah, likewise on oil, I know you've been pushing oil very aggressively as of recently as well, and we've formed quite a nice base at 5,500. On a technical chart view, it's been struggling to get above that 5,200, which is the blue line, then got above it, so I entered some of my positions. And then it looks like we got above the 200 on the green line as well, and now we're retesting that. So I'd say another good area to potentially add in line with that move, but also on that 200. And as you can see, historically with oil, when we've got started to get above the 200 again, you might get above it and then tap it and bounce off of it. But for more macro views, do you have any more macro views you'd like to touch on with oil and more reasons why you think it will take out its all-time highs at 120, even though it's at 61 at the moment?
Well, my view on oil is very similar to my view on silver. I said when we were talking about silver, when it was still at 25, $30, what else can you buy for less than the price that it was in 1980?
Mm,
And that proved to be absolutely right. Well, oil's all-time high at around 145, $147, I think it was
mm,
back in 2008. So what else can you buy at 2008 prices? And if you look at oil price in gold, because all this fiat money nonsense in dollars and euros, pounds, whatever, it's just all Mickey Mouse money. But if you
yeah.
price it in gold, now the long-term average price, you could buy 10 barrels of oil, 10 to 12 barrels of oil for an ounce of gold. Today, you can buy 77 barrels of oil for an ounce of gold, which would suggest that the price of a barrel of oil should be more like 300, 350, 350, 300, $350.
Mm,
So that is the price. You're going to see that long-term average coming back at some point. I'm not saying that's going to happen this year or even next year, but
yeah.
at some stage that's what's going to happen. But what I am saying is going to happen, and I said it last year, and I've so far I've been wrong, but oil is going to take out that 147, and when it takes out that 147, it's probably fairly quickly going to go up over 200.
Yeah.
So I'm still saying my forecast is that oil is going to go above 147, and I wouldn't be surprised to see it happening this year.
Yeah, and we're in line with 2019 top 19 levels as well. And once again, real assets like take out their all-time highs, and we are, I think we're primed now for that. I think we've already priced in a potential recession, as you've said also. I mean, even with the 2008 crash, um, oil rose for 8 months before it started to fall as well. And people
Yeah.
like to say that oil follows the same as the market, but yeah, I mean, I like how your also ratios with the comparing to gold. I mean, we were talking about gold when it was just was it 2000? And we were saying that, it's now at 5,000 plus. But I think you were saying there we'd love to see $10,000 gold to a $10,000 Wall Street, which I
Yeah,
think I think yeah.
my long-term prediction is that you'll be able to buy the Dow for 1 ounce of gold at some point. So
Mm,
at some point, gold's going to change its rise, and the Dow is probably going to come down. They're going to cross over at some point. The last time we saw that was around about 1980, where you could buy the Dow for 1 ounce of gold. And I suspect we'll see that again
yeah.
in the future. So you've got to get the real view of the value of it, you've got to price it in gold because gold is the only real money that we have. It can't be
Mm,
manipulated by government inflation figures. Gold is real money. It's the only thing that's been real money for 5,000 years. So pretty much the gains and everything since 2000 has all been inflation. So
yeah.
everyone thinks they've made a lot of money in the stock market or in houses or whatever. The stock market has been in a bear market since 1999 in terms of gold. It's actually fallen in terms of gold for the last 25 years.
Yeah, it's a good point, and when it's real money and the thing that you shouldn't really be uh trading much and just owning. and then you're pricing it on all these different assets. It's very, very fascinating.
Yeah,
Uh,
I have mixed feelings about gold rising because I
mhm.
like to buy gold every month.
Yes.
And so on the one hand, I like to see it going down so that I can convert fiat currency into gold. On the other hand, because I've been buying for so long, it's kind of nice to see it going up. So I have mixed feelings about it, about the
Yeah.
rise of gold. But it's telling us that things are not right in the economy.
Absolutely. Yeah, it is scary times, and obviously metals are falling aggressively at the moment. But as shown earlier, there are specific levels to watch. I mean, we're hitting about 4,500 on gold at the moment, but it's also in line with its 50-day moving average. So it's starting to have a little bit of a bounce there. And yeah, I really like your outlook and perception on metals, and even if things kept going down against everyone's expectations, then it's just more opportunities to get to buy real money at a discount. So,
Yeah, I
so
mean,
yeah,
who wouldn't love to see, gold, be able to buy gold when I started buying gold in the 90s at $300 an ounce, I would love to be able to buy gold at $300 an ounce again, but I don't think there's any chance of that going back.
no, no, exactly. Yeah, yeah, but yeah, and likewise, people might disagree with us, but our track record, I think, has been speaking for itself at the moment, and it's good to know what your not enemy, but your opposite trader is doing, because you'll know where that they're
Our, our,
expecting certain levels to
our
be.
best calls have been when people disagreed with us most and we got the most abuse. When we said that Bitcoin was going to fall, we got a ton of abuse for that. Everybody
Yeah.
saying we're idiots and we're wrong for us. So the more people that say we're wrong, the more likely we are to be right.
Yeah, yeah, and those people who are disagreeing with us should probably be one considering actually switching switching sides, but two just being aware of where our targets are and therefore maybe where their entries and stops should be. Because
Yeah, yeah,
we're
it's
coming
always
for
worth
them.
looking at the opposite sides. Look at someone else's point of view and see if they have a good case to make for their point of view. It's always, none of us should be in the world of trading should be arrogant enough to think we're always right because
Yes.
no one's right all the time.
Yeah, you can't be in that euphoria land. You need to be grounded at times so that one, you take out the emotion of investing and trading as well. So
Which is
absolutely.
easier said than done.
Yeah, easier said than done. That's a good note to finish on. Well, thank you very much. There's some really good points there.
Thanks, Alex.